Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we got some movement here before the stream started. I'll come over here real quick. You can see the dollar getting crushed and the treasuries taking a big old jump there. So let's see here. And that erases pretty much all of the negative downside action. Well, not this downside action. This stuff, I guess. Yes, doing okay. Oil, gold and silver still looking really nice. Copper up a little bit. Japanese yen. So we saw a little bit of upside movement in the Japanese yen, but then definitely some movement off of that. And Bitcoin still where it was. Coming through and reading. Oh man, the light is like way right. We'll keep my heavenly aura there. All right. I think that it was from Besant speaking, but sell my stocks. Treasury secretary. Small amount of Argentina line of credit was drawn on. Very heavy profit on the swap line. Does not believe tariffs are attacks on consumers. There's been a gigantic drop in mortgage rates. We have inherited an affordability crisis. Okay, so the Trump so it seems like that this interview with Besant is intended to be a, administration addressing the concerns about domestic policy. But I do not see what is in there that would spark such a huge jump there. Basically, well, I think that one could say that it happened at 6:15. It was really more like 17 though. Yeah, as he says, I thought it was going to be today was going to be nothing and it explodes. Well, we have seen an increase in volatility. We're back to 5%. Was it just the ADP? ADP weekly US employment negative 11,250. You have a video about learning about order flow? Yes, if you go to the main channel page, there is an entire playlist. It must have been the ADP. Yeah, I would not expect the ADP one to be on that. So remember, this started last week. ADP said that because we don't get the jobless claims or the non-farms number during the government shutdown, that they were going to start releasing a weekly series. So I'm a little bit skeptical that was the whole thing. but it does line up with the timing of the release. And I suppose it maybe was a little bit of a slow start because, you know, like the robots aren't necessarily aware of it. So I don't think that it was specific. It must have been the jobless claims, or not the ADP number. Well, and that could be significant. In terms of like where we're at on our volatility measures, though, they blasted through the overnight number. So I'm curious to see how you deal with this one. You don't necessarily tell me, but I'm curious to see when we've basically had a strong move up, like just before the start of the regular session, and blasted through the first overnight level. Do the regular session levels not matter anymore? Well, I do think if we have a continued move up, 113 is going to have a lot of liquidity at it. Oh, that's a good point, AO. I almost totally forgot about that. Like, if we had sat down and that move hadn't have happened, I would probably be saying, yeah, I don't expect it to go very far because it's a bank holiday. But I think that just kind of makes the ADP number better. Here, so supposedly, we might get the non-farms number as soon as Thursday. So, and we'll get, like, I think the September number first, and then we'll get the October number. And I think what you're going to see is some numbers that were actually a little bit better than expected, and then like a huge slump. And that slump might be attributable to the shutdown overall. But that's just kind of what I've seen, is that, like, you know, the last non-farm number that we got was bad, right? And it seemed like things were pretty bad, but then, like, right about the time that I started searching again, it got better. Because I never stopped looking and interviewing for jobs, but during that 6-month period over the summer, where we were having the trade war and all of that, I think I only had like 2 interviews overall. And then when that contract job ended, I had a lot. It picked up. And then in the last little while, it's kind of evened off a little bit. So I think that you'll probably see that in the numbers as well. I think that kind of like everything together kind of seems like, oh, it's Veterans Day today. It's Veterans Day. But it does sound like that the government shutdown deal cleared the Senate, will be going to the House, and that they will probably get that today and tomorrow. And so then the government will open back up, and immediately some of the data series that we were missing, particularly the October jobs report, will come out on Thursday. Here's an interesting flowchart. This guy is saying we hired somebody, and here was the flowchart. 159 applicants? That seems small because a lot of them are saying that they get like 1,000 applicants per role. But okay. Only 34 out of 159 qualified. They sent them a take home. Well, that's interesting that 14 didn't respond. 3 didn't do the thing. Phone call, team calls. So they interviewed 5 people. That's rough, man. That's rough. He got downvoted. Yeah. Oh my gosh, that's a good point. You've spent at least 17 people's time on a take-home task. Let's say that effort is 4 hours of work. You've wasted almost 9 engineering workdays, which you didn't even get invested in the company's work, but simply burned in thin air. Instead, you could have had each of those a panel interview each of these candidates with 3 of your engineers grilling them for an hour. You would have had the same investment returned and likely better quality hire, but also your engineers brushing up the interviewing skills. Candidates would spend less time, and even when rejected, they would likely have an overall positive impression of the company. Rejecting them straight up after investment of time into the take-home task definitely makes them hate your guts. Big offer in ZF. Yeah, but it's at the high. I'm eyeing that 113 even though in ZN. Still. We did come back up a little bit, so I think there's a good chance that they... I mean, I guess the trade would be by 30. Now, I don't really like 30. Maybe if you got filled at 29.5, you could work that out. 29.5 to 13. 1, 2, 3, 4, 5 ticks. 1, 2, 3, 4, 5. Back to 27. I guess that's an acceptable risk reward, but... From the leading report, Gen Z expects to inherit money and assets, but their boomer parents have no plans to leave anything behind per Fortune. Yeah. I think that there's going to be a lot of generational wealth left by the boomers, but way too much of it is just going to get spent on healthcare. Oh, so some questions about your indicator before I actually start using it. Sure. Will it automatically scrape the new options contract? It scrapes the month that your chart is on. So if your chart is on the December contract, it scrapes the December contract. So when the contracts roll over, you will roll over your chart in NinjaTrader, and then it will start scraping the new contract that you have rolled over to in NinjaTrader. I had to. It was kind of funny because, their web interface does it in like ZN, Z25, I think it is. right? They use like the actual exchange code, whereas NinjaTrader does, 1225. So I had to create a table and convert them. Don't want to stop tracking it manually. Well, it might be worth it to keep tracking it manually. At least doing both for a while, right? But, we had that one brief little issue. And then since then, it's been fine. And I think that the version, because I wanted to have the fair value gap thing available. So I did put a new full version up on the website last week. Man, sometimes I feel like, you're such a piece of crap, Seth. You just don't do anything. You're not getting anything done. But when I go back over and I look at all of the little things that I have done since, being able to, well, I wouldn't say full time, but, I'd say I get about like half the week to do things. I've actually gotten a lot done. So last night I got the whole Git thing working. Some problems with it, but it works. So I can show people the code and review the code now. That's cool. So I think my next little project will be refactoring some of the GUI code so that the rendering logic and so forth is in its own separate build file. And actually doing, like, drawing a chart. Like right now it just draws a triangle. Doesn't change track changes in volatility though. Yeah. It will grab the number that it is when you look at it. So if you leave it open all night, it will probably grab the number from the extend session. I could change it so that it tracks it twice. Like, I haven't done that because I'm not quite sure how we would want to handle that. Would we want it to be like you have the extended session is what it was at the extended session, and then the regular session is what it was at the regular session? Or do you want it to be like when the regular session starts, it updates the extended session ones to be? I would think that it would be rare that there's a significant difference between the two of them. But if there was ever a time where it maybe happened, it would maybe be today, yeah? That's the thing, though. Manually, I do both, but I'm not sure that's all that beneficial to us or worth doing, yeah. Well, and the issue is that you have a spreadsheet that calculates the level, but your spreadsheet wasn't, like, keeping track of the percentage number. So we can't go back and look at, like, what was the biggest difference between what the options were on the extended open versus the regular open. I suppose ultimately, if it loads whatever the number is while you're trading, that's all that really matters. Yeah. And plus, well, we're now finally kind of getting like the interesting test case where over the past week, volatility in bonds has increased a little bit. And we've had a couple of days where we've outperformed the volatility. And you're definitely getting that today. So we'll see if they're able to get to 113. And then if 113 ends up being a significant data point or not. I'm kind of thinking that they might get to 113 and just kind of stay there instead of bouncing. By the way, here was a interesting story. SoftBank dumps entire Nvidia stake to double down on core AI enablers. Remember, SoftBank is this kind of... They've been involved in controversy before, so do I really care that they did something? I don't know, but it seems like Nvidia got hurt as a result. Just come here, refresh Zero Hedge to see. Dollar Dump says ADP report shows big job losses in October and small business optimism hits 6-month low. Let's read that. By the way, I really like these headlines I'm seeing. Trump administration to build nuclear power plants. That was something I remember saying when we were talking about like what might Trump do. That was like, well, I don't think he's necessarily explicitly said that or anything, but I really hope that a Republican administration will lead to more building out of nuclear power. And it has. I haven't had a chance to really, well, we could look up SMR at least. Actually, let's look at, oh, where is it? I don't even remember. Oh, there it is. Coifin. Watch this. Please wait while you're watching this. There we go. So, has SMR continued to perform? Well, it's down 6.3% today, so that's not. And down 27.55% over the past month. So they have given up a lot of their gains. So I think to play that, we would need to find more traditional nuclear tech companies. Interestingly enough, the biggest winner in that group is Cameco. At least over the past month. 8.76. Uranium, the big winner, though. And they're up 5% today. So. Yeah, the silver got hammered this month, but that's okay. Rare earth minerals still at 1. I tell you what, man, these two right here, Welltower and the Ensign Group, I think if I put more money out into the market, it's going to be in there because these just continue to perform. Those have been like the slow, silent, steady killers, you know? Shouldn't call them killers, but they've been good. Man, I tell you what, the activity in the DOM has really died down. So I do think that markets were reacting to that ADP, but it's a holiday. Like, they're not there. So that's interesting. Let's read the story about the ADP report. Recent announcements of large layoffs at a few prominent companies have raised concerns that the labor market could be weakening further, and today's new ADP employment report confirms that fear. The ADP weekly jobless report pointed to a deterioration in U.S. labor momentum, stating that for the 4 weeks ending October 25th, 2025, private employers shed an average of 11,250 jobs a week, suggesting that the labor market struggled to produce jobs consistently during the second half of the month. A sustained increase in layoffs would be particularly concerning now because the hiring rate is low and it's harder than usual for unemployed workers to find jobs. So far, Goldman does not find clear evidence that most of the increase in these layoff measures is directly motivated by AI, although tech industries saw meaningful increases in layoffs in October across both measures. At the same time, initial jobless claims, which are less noisy and more representative but could lag layoff announcements and warn notices, remain low. Goldman complements this data with a new tool to track layoff discussions among publicly listed companies based on earnings call transcripts. Their tool suggests that layoff-focused discussions have increased recently, particularly in the ongoing 2025 Q3 earnings calls. We find that layoff discussions increase after companies discuss AI in earnings calls at least a few times, although this pattern has only recently started to emerge for non-tech companies. We combine challenger announcements, warn notices, initial claims, and earnings call mentions into a layoff tracker. Goldman's tracker has increased in October and is now higher than before the pandemic. Our quintile regression is based on the level of our layoff tracker, the level of our job growth tracker, net of the break-even pace of job growth, and changes in our Slack tracker indicate the risk of labor market deterioration has increased recently, with the probability of a 0.5 pp or higher increase in unemployment rate over the next 6 months at 20 to 25% versus 10% 6 months ago. Finally, sentiment among small businesses eased in October to a 6-month low on deterioration in earnings and less optimism about the economy. The National Federation of Independent Business Optimism Index declined 0.6 points to 98.2. According to the figures released Tuesday, 5 of the 10 components that make up the gauge decreased while 4 improved. The net share of owners reporting stronger earnings in the last 3 months fell 9 percentage points, the most since the pandemic, and restrained by weaker sales and higher material costs. The result of all this is a rise in rate cut odds at a drop in the dollar. And a drop in the dollar. Stocks are largely unmoved and bonds are closed, but bonds did move and have been pretty dead since. Interesting. Interesting. Oh, there's a good catch there. Big order at 13. I don't know. That's a little suspicious though, don't you think? Well, it's still within like the first 30 minutes. So spoofing would tend to be a little bit more like the earlier in the session it is, the more heat I'm going to give it. But it's been so dead. I don't know. And by the way, all of this movement has not led to a significant change in the spreads. So that's another thing, is when I'm noticing it in one versus the other, you know, maybe it has something to do with spreads. Also, I'm not sure that makes sense, because that would be a flattener, wouldn't it? I don't know. Whereas what we're getting kind of suggests if the spreads were to move, I would expect the spread to be a steepener. Not that we've ever been very good at predicting changes in spreads. Pulled the big MBO offer into ZF, so the market's pulled back. Yeah, I'm still staying skeptical that we're going to get a whole lot more movement today. If we do get any movement, I think that it's going to be to that 113 even. But that 113 even, not only is it a really round number, but we have spent a lot of time there. So there's going to be a lot of liquidity there. So here's another story I saw yesterday. I'll read it to you. After months of layoffs, is tech hiring making a quiet comeback? Despite the recent news cycle appears to be dominated by headlines about tech layoffs and hiring freezes, new data suggests tech hiring is quietly picking back up again. An analysis by CompTIA shows a 5.3% increase in active tech job postings in October, signifying one of the strongest monthly gains this 2025. While the job market typically cools down during this period, October saw 217,238 new job postings, up by 3.8 from September. As new and active job postings are at a yearly high, the jump is surprising for reasons beyond seasonality. Given the industry's cautious spending patterns, interest rate pressures, and ongoing workforce reshuffling, this welcome recovery suggests that demand for specialized tech talent hasn't vanished altogether. Tim Herbert, chief research, just big thing popped up on the screen. Tim Herbert, chief research officer at CompTIA, noted that these modest but meaningful gains reveal that the not always apparent offsetting effects of job gains, job losses, and job transitions. Several industries expressed strong hiring intent for tech roles, with IT services and software development leading the rebound with 23% year-over-year change. Other sectors like retail and finance and insurance also reported high year-over-year increases, whereas public sector was the exception, with its job posting decreasing by a third. Okay, so I don't know if I read this whole thing. I was hoping to see if it would say where it was, where they were, like what types of positions they were, but I'm not seeing that. But the other synopsis of this story that I saw said that it was more specialized tech positions, cloud, things like that. And that would seem to line up with what I am seeing as well. That the tech companies, they hold a lot of people, but they were calling like middle managers, HR, those kind of supporting roles. And the actual tech people, they are starting to pick up on hiring those, specifically in areas where they've been weak or whatever. So I'm of companies where they have big DevOps transitions that they need to make, for instance. So that's why I do kind of think that it was like you're going to see like good, maybe better than expected. Like if we get a number on Thursday, that number might be better than expected. But then you're going to see a trough and it will even out. And you are seeing it improve. But then at that point, it will be, does it really improve and stabilize, or does it just fall off? Like it's too much and we are going into the recession. Okay, so we're getting something that I don't notice very often in the treasuries. And that is that the 5-year is up 3 ticks and the 30-year is up 3 ticks, but the 10-year treasury is only up 1. And so we are getting flattening in the knob spread, which is counter to what I was expecting, but it is actually like a butterfly. So an opportunity to have made 3 ticks on a butterfly. I don't notice that very often. Michael Burry has said that Oracle Meta could be overstating earnings by 26.9%. He adds it gets worse. Understanding depreciation by extending useful life of assets artificially boosts earnings, one of the more common frauds of the modern era. Massively ramping capex through purchase of NVIDIA chips/servers on a 2 to 3 year product cycle should not result in the extension of useful lives of computer equipment. Yet this is exactly what all the hyperscalers have done. By my estimates, they will understate depreciation by 176 billion through 2026 to 2028. By 2028, Oracle will overstate earnings by 26.9%, Meta by 20.8%, etc. But it gets worse. More detail coming November 25th. Stay tuned. 25th. Enter by the 25th. So one of the things that's interesting there with Oracle, I think Oracle is an interesting stock to watch right now because they have a cloud, you know, just like AWS and Microsoft and all of them have clouds. And it does appear to be increasing in popularity. And so I think that it is likely to become a viable fourth option. And if that is the case, you know, that's a lot of money they're going to make. I don't know what that is relative to like their estimates and things like that. So you've got like some reasons to think that Oracle is going to grow and some reasons to think that they are exaggerating. Okay, so we got the 2 ticks up there in Xi'an finally. But they shying away from trading 113 still. There was some decent volume there. That kind of looks to me like there is a big buyer there. And they decided, oh, what the heck, it's fine. We can buy it up into this. Oh boy. If Bernie Sanders was the Democratic presidential nominee in the 2016 election, what are the chances that he would have defeated Donald Trump? Not very good. Not very good. And it would probably completely change the way that our political conversations are today. Do you think that there would be as much people defending the Democratic Socialists of America, Mamdani, all of these sorts of things, if Bernie had run and just gotten absolutely destroyed by Trump? Yeah, probably not. It came up there and it kissed 113 even, but it's come almost completely back down. That's a little... I hope I do have to get going in an hour again today. But this is some of the more interesting action that we've had, and I hope that we see the full thing before I have to go. Is wealth management the next investment banking? I think that it already was, and that you've maybe already missed the boat on wealth management. Actually. But do you really think of the secret lives of Mormon wives absolute trash that doesn't actually reflect what really goes on in Utah? For some reason, my eyes are watering a lot Trump administration wants to allow crypto-backed mortgages. Oh boy. 50-year mortgages and 15-year car loans. Well, doesn't necessarily mean so here's the thing about the 50-year mortgage. I've definitely heard him talk about, like, back when interest rates were low, he should have made 50 or 100-year bonds and issued a ton of them so that the US's funding issues would be, you know, at least contained for 100 years. And so I don't get why they're all of a sudden pushing 50-year mortgages. Like, I know that having even larger terms of debt, it has been a thing that they're interested in, but I don't get why all of a sudden at this particular time they decide to start talking about it as it relates to home mortgages. Seems kind of foolish, doesn't it? Let's not say foolish, but let's say silly. Seems silly. Because I don't think that anybody is actually going to go and get a 50-year mortgage on their house. Actually, you know what? Maybe I'm wrong. So, like, I don't think that the savings are a ton. But how much? So, like, the thing is, okay, you're saving like a few $100s on your monthly mortgage, right? But then you end up paying more overall. Oh, hold on. Oh, I have to take a kid to school right now. So we'll continue this in a second. Okay. Well, it looks like they maybe ticked up a tick since I was gone. It took me longer than I thought, but we haven't really moved. It's still really quiet, and I expect the Treasury still to be quiet. But the S&P 500 is about to open up here, so we'll see how that goes. Anyways, what was I saying? Yeah, it was you get monthly savings, but you get blasted on the interest. Yeah, so basically, if you get a 50-year mortgage, you're going to be paying less on a per month basis, but because you're doing it over 50 years, you're going to pay way, way, way more in interest. But here's the thing. If you were only planning on staying in that house for 5 to 7 years anyways, which is the amount of time that most people keep a house, then does it really matter? Because you're never going to get you were never getting close to paying off any of the mortgage and really building a whole lot of equity in the house to begin with, right? So I could see a case for, yeah, the people that really want to stick it out for 30 years and completely pay off their house are going to continue to get a 10 or a 30-year loan. But the rest of them might get 50-year mortgages because it's a little bit cheaper. But they're just never going to own anything. Probably doesn't solve the housing crisis, though, right? We just need to build more houses. That's really what it comes down to. Man, I tell you what, watching Reddit's reaction to Democrats caving on the government shutdown is really something else. They really had bought into the whole, we're doing this for a reason and we're going to get it and yada, yada. They really leaned hard into that. And now that the inevitable results that we were all predicting comes to fruition, they can't cope. I let an AI run my trades, thinking it would remove emotion and make better calls than me. At first, it looked promising, with clean entries and consistent gains. I trusted it more than my own analysis. The market volatility picked up, and the model broke. It kept adding to losing positions and ignored stop levels. A good month turned into one of my worst. I learned that AI can help with data and backtesting, but it cannot replace judgment. It reacts to patterns it has seen and fails when conditions change. I went back to manual trading and now use AI only for research and ideas, not for execution. Yeah, well, those are one of these funny things is that, because the AIs have been trained on us, essentially, they fall for the same biases that people do, except for that it's like on a much more broad and consistent scale. So just putting an LLM on trading ends up being absolutely terrible. I think that you could incorporate AI or LLMs into an effective strategy, but you wouldn't want it running the whole thing. What? AI agents in Minecraft? You chat with it and then they just build whatever you tell them. Oh, you gotta see this. Alright, introducing Steve, AI agents. Everyone builds a house, and then all three of the agents go and build their own house. That's pretty amazing. They build cool houses too, a bit cooler house than I could build. Okay, everyone murders sheep, and then they go around and start trying to kill all the sheep. Charlie, start mining for diamonds. Wow. So I can have them. Oh, and it strip mines. In fact, that's awesome. And of course, they call it Steve. Peak AI. They're calling it cursor. Let's look at the project. Cursor for Minecraft. Treasuries came back down here. So do you think that all of that, like, stuff that was like the big bid, was it like straight spoofing? Kind of feels like maybe it was now. I know it probably sounds dumb, but I really think AI companions are the future of game. Right? Can you imagine playing a game like Minecraft with AI companions? I think it'd be more fun to play with people, though. Yeah, just wait until Microsoft makes it a built-in feature. Available on Bedrock only. Here's a guy on Reddit. With Christine Pelosi stepping into politics as her mom retires, I bought ChristinePelosiStockTrader.com. Hey, except for that it was Pelosi's husband that was the stock trader. So unless Pelosi's daughter is similarly married to a hedge fund mogul, I don't know if it's going to work as well. Still, that's hilarious. Oh boy. Just somebody saying we need real volume footprint. No, you don't. And then they go to Sierra charts versus Trading View, and Sierra's not necessarily MBO, right? Is vibe coding drop shipping in 2018 all over again? Yeah, maybe. I don't really see people push the drop shipping thing anymore. I guess tariffs probably killed it. I don't know. It's a video of some people at a rave, and it looks like they're playing Magic the Gathering during the rave. I bet you there's going to be all sorts of upset comments in it. We'll go to the back of the crowd. Yes. Tariffs killed it, but we're getting 2K stimmy checks. So you know, I actually looked into that quite a bit yesterday. And I thought it was actually really interesting because basically you have to think about all of these policies, whether it's taxes or anything else like that, really as capital allocation mechanisms, controls, whatever. Basically, you have this whole economy and there's different sections in the economy. There's different industries, there's different income groups, all of these different ways that you can split the economy up. And you basically say, okay, there's money here in the economy. We want the money to go from this area to this area, or whatever the deal is, right? The market is not perfectly efficient. So it makes sense that there would be some situations where you would want to adjust where the capital is going to in order to meet certain objectives. Like if you think that AI is crucially important and you need more of the capital to go into developing that, right? The issue is that we don't have direct control over it, right? We can make these policies that will encourage the capital to go to where we want, but not necessarily guarantee that it will do what we want. So when it comes to tariffs, what is the actual intention of the tariffs? We want the money to go from people that are importing goods from other countries, and we want more of that money to go to people that are manufacturing those goods here in the United States. Right? So we implement the tariff. That's a pretty direct way to kind of enact that. Well, rather, it takes money away from those importers. Doesn't necessarily give it to the people that are building things here, right? There is some question as to if that will actually happen, because you've got to like redevelop that industry. So even if it does happen, it takes a long time, right? But at the same time, everybody kind of gets hurt by it, right? I wouldn't say that we've had hyperinflation or anything, but I would say that there has been a mildly negative effect on the consumer and definitely on business hiring and all of these sorts of things. Okay, so how do you deal with that? Just give all of those people that were harmed by it, that weren't intended to be harmed by it, money. Well, I'm not saying that it's a good policy necessarily, but it's not like brain dead stupid per se. Ultimately, it would be better if we just didn't have tariffs and other countries just didn't cheat on trade so that we had fair trade. Well, that's probably not going to happen. So what's the next best option? Is the tariffs really the way to go? I don't know. I don't think that the tariffs have been as bad as people thought. But I also don't think that giving people a $2,000 check really fixes it. But I don't know. My thinking is, well, if you're making a ton of money from the tariffs, really what you want to do, don't just put it back into, everybody's pockets where they're going to go and just spend it. People that have a high propensity to consume. You need to find a way to get more of that get put into investment, like investing in that domestic manufacturing, which would maybe mean subsidies and or investments into domestic manufacturing directly could be one. But I think another one would be, okay, yes, we could give, lower class and middle class Americans $2,000. But why don't we give it to them in a form that like they won't spend it? Like, we'll give it to them in the form of S&P 500 shares, you know, or we give it to them in exchange for a different tax being lowered, right? Like, no capital gains tax if you make under $200,000 a year. Okay, that would probably match up really well. That would increase investment. That would be like a net positive for the economy. Oh. Well, it's kind of interesting to think about these sorts of things because, again, the problem is you kind of want the capital to be reallocated in the society, but you don't have direct controls over that. And any policy that you implement tends to have unintended consequences. I'm really concerned that if you just give everybody $2,000 and they go out and they spend it, then what will happen is they will just go and buy all of the imported goods that were too expensive for them before, and then you actually do get the inflation from the tariffs, you know? Just noticing a little bit of a decline in Bitcoin. It doesn't look like anything too serious, but it's curious. I'm seeing Bitcoin go down. I'm seeing gold go down. The dollar is holding steady, and so is the treasuries. President started the whole stimmy check thing back during COVID. Yeah. It's like the predecessor to UBI. Well, if it's the predecessor to UBI, doesn't that whole thing during COVID kind of show you that UBI doesn't work? Like, come on. Like here's the real value of understanding the monetary system in these terms, that you have money and you want to know where that money, what sectors of the economy that's going to go to. And if you just give it to people that spend it, then it just gets spent. It increases GDP, but it doesn't make anything better, because what needs to happen is we need to grow the economy relative to the debt to fix our problems, right? To bring back that wealth and prosperity, we need to bring the growth rate back up relative to what the debt is. So you have to invest. You have to invest in things that actually increase efficiency and make people's lives better. And UBI is basically just giving this huge chunk to the people that have the highest propensity to spend. When you do that, the result is that the cost of those goods tends to just go up. And so maybe I wouldn't say this is exactly true. I think that with the food stamps discussion, from what I've seen, there's a lot of takes on it that I don't think are entirely correct, like that food stamps are dramatically increasing food prices for people. I don't think is true, but there is an effect. Okay. And if you have UBI, what you're probably going to see is rent's going to go up. Food's going to go up. All these things are going to go up, and it's going to go up in accordance with the UBI. And the amount of capital that the working and middle class people have isn't going to increase. Because what's happening? They immediately spend it, and then it goes back to the owning class. So UBI doesn't solve anything. Doesn't solve anything at all. And you can see that in COVID. COVID, in many respects, was like a dry run for UBI. And what happened? Massive inflation. Though it wasn't on the other side, the stimulus checks, as I understand it, didn't have that big of an impact on things. Like, it just got spent and it didn't really change much of anything. And it was really more the Federal Reserve keeping interest rates low for so long when they really should have increased them much, much sooner. That really, really led to the runaway inflation that we had. So, well, there's my ding. So it's almost time for me to get going here and wake up Asher and get him to school. Yeah. You know, the other thing with UBI is you have to give people meaning, and I just don't think that it does that. I think that you're more likely, if you actually see a situation where, like, labor really does get automated, I think that you're still going to have an economy. It's just that the primary way to gain and develop capital will no longer be labor. And a lot of that maybe will go into more like relationship-based value. No, his name is Asher. No on. Anyways, you know, things where like you get hired to work at a company, and what you do really doesn't contribute to the bottom line whatsoever, but it contributes to a certain culture at that company. I think you'll see stuff like that. I think that there may already be a lot of that going on in the corporate world that we don't realize. There's maybe a lot of people that, at least during regular times, not when they're all like cutting in interest rates are high, but I think during regular times, there are a lot of jobs that just exist to give people jobs and don't actually make a difference to the company's bottom line. But they help the overall economy, and so they're generally a positive thing, and companies are willing to do them. And I think you'll see more of that. We'll be doing jobs that AI and robots can't do, and or maintaining the AI and the robots. Yeah. But what are the jobs that the AI and the robots can't do? Like if AI really goes to like this singularity place that people talk about, or just hyper intelligence, there's not going to be a job that the AI can't do. So, except for maybe creativity. There might be this thing where like people still prefer the work created by humans. Something like that. I guess before I go, I also want to refresh here and see if there's anything. Trump asked Supreme Court to take up E. Jean Carroll's defamation case. That one would be interesting. Okay, well, I think that's about it. I'm going to get going. I will see you guys tomorrow. Remember that we might get some data on Thursday, so that'll be a big deal. We'll see what happens tomorrow. Anyways, I will see you tomorrow. Stay excellent.